To understand what this result means now for the markets and for the broader economy, joining us is Rashesh Shah, President-elect at FICCI, as well as the head of Edelweiss. Mr. Shah, I appreciate you joining us here on CNBC TV18. Let me start by asking you first about the market's verdict. We saw that big collapse in the markets when it looked like the victory was going to go to the Congress as opposed to the BJP, which was certainly not factored in any form or fashion by the markets. But since then, we've seen a very steady recovery. So from a market point of view, clearly the vote is for predictability and for stability, and that's what the market likes.
Absolutely. I think in the morning, at least at the opening time, there was a little bit of shock to the market because everybody had factored in, that the BJP government would come back in Gujarat. And as that became clearer, I think the strength that the investors have shown, I think shows us that underlying the market is very positive. And I think most investors have heaved a sigh of relief, even though they were expecting 105 to 110 seats. They are overall heaving a sigh of relief, and the strong strength in the market we have seen just shows that given the liquidity and the earnings optimism that is there, it is still intact. And I think overall this augurs well for the market. Having gone through a test like in the morning today, the investors' confidence is what is a lot more reassuring. Okay, so reassurance there as far as the stock markets are concerned. But let me ask you about the broader economy. And I think it's naive to imagine that whatever the message the government wants to take away from this electoral verdict would mean there would be a departure from its stated economic policies and its stated economic objective. But I think it will boil down to choices. We're now on the cusp of another big economic trigger, and that is the union budget. You've presented your budget wish list from FICCI to the finance minister. He's constrained. He has only limited resources to deal with at this point in time. So if he had to make a choice between providing a corporate tax cut or putting more money into the rural sector, I would imagine this victory would now force him to think about the latter, which is more money being allocated to the rural sector as opposed to a corporate tax cut. I think partly true. I think the rural focus has been there even in this current year. I think government has given more focus on the rural investments, mainly for the reason that given the poor rainfall for the last couple of years, the rural distress was becoming a very large economic and social issue. So I think the rural focus will continue, but I don't think it will come at the cost of growth and all. And we do believe that. So are you still hoping? Are you then still hoping for a tax cut on the corporate front? Because they'd promised 25% across the board. They've done it for a large part of the corporate universe, not for the large companies. Are you still then hoping for a headline cut on the corporate tax front? I think the key word you have used is hoping. I would say yes. We are still hoping. If you ask me, I think it's unlikely government will have the room for that. Or even from the optics point of view, this is something government don't want to be seen as the would want to use their capital on. Which the Congress has continuously tried to force them into that box. So given the optics, you're saying that that is not the route that they would like to take. But what about sticking to the path of fiscal consolidation? And I know that FICCI has also recommended as part of its budget wish list that the government must continue to amp up public spending, whether it's on infrastructure, etc. Now, the question is, if 3.2 becomes 3.5%, which is what you've recommended, that much of a slippage will be acceptable, is the fear now that there might be a little more? I think 3.2 to 3.5, I mean, hypothetically speaking, is something that will make the business constituency very happy, but will not make the investors constituency very happy, because if you have seen last 3-4 years, every year around the annual budget, when the government stuck to the fiscal consolidation path, the markets reacted very positively. So I think it might be better for the government to stick to the fiscal consolidation path, find the find the additional revenue if required through asset sales or disinvestment. And I do think 2018 might be a great year for disinvestment, and government may end up exceeding the target the way it did in 2017.